Texas real estate is cracking, and Zillow's latest forecast just revealed which cities are headed for the biggest fall yet. For years, Texas was the unstoppable engine of America's housing boom. Prices soared, investors flooded in, and everyone thought the ride would never end. The first cracks appeared in 2022, and now Zillow's newest data confirms it. While some cities are leveling off, others are still sliding fast toward a deeper correction. So, which markets have hit bottom, and which ones are still falling? In this video, we're breaking down Zillow's 2026 forecast city by city, counting down from number 5 to the Texas Metro expected to see the steepest price drop of all. Number 5 is San Antonio, projected to drop 0.8% in 2026. Now I know what you're thinking, less than 1%. While it's the smallest drop on our list, it signals a broader systemic issue. San Antonio has long been seen as a more affordable and stable alternative to Austin, but that stability is now being tested by a flood of new supply. The single biggest factor driving this projected decline is a massive boom in new construction. During the pandemic-era housing frenzy, developers saw San Antonio's affordability and strong population growth and went into overdrive. They acquired vast tracts of land. They began building new homes and subdivisions at a frantic pace, trying to meet what seemed like limitless demand. For a while, the market absorbed these new homes easily, but now, with higher interest rates sidelining many first-time buyers, that fire hose of demand has slowed to a garden hose. Meanwhile, the construction pipeline keeps delivering a torrent of new inventory. That influx, plus more existing homeowners listing, creates a classic oversupply situation. Builders can offer incentives like rate buydowns and closing cost credits. That puts immense pressure on the resale market. A regular homeowner can't compete with a well-capitalized builder who can slash prices. Sellers are forced to lower expectations and prices. The minus 0.8% forecast from Zillow is essentially the math of this supply-demand imbalance. It's not a crash, but a gentle, prolonged period of price softening as inventory is absorbed. For a large city like San Antonio, even a small drop equals billions in lost homeowner equity. It's a clear signal the days of rapid double-digit growth are in the rearview mirror. For investors, this requires a strategic shift. The buy-for-fast appreciation strategy that worked before is now fraught with risk in San Antonio. You could buy today and a builder starts a new phase next door months later, offering similar homes for less than you paid. The focus must now shift to cash flow and long-term appreciation. If a deal doesn't make sense on day one rental income and you don't plan to hold it for at least 5 years, walk away. The market won't bail you out with easy appreciation. Careful underwriting is more critical than ever. Number 4 is Laredo, down 1.2% by 2026. Laredo's economy is unique in Texas. It's overwhelmingly dependent on international trade, specifically trucking and border logistics. For decades, this has been a stable and growing economic engine for the city. But recent shifts in trade policy and global activity are creating headwinds for the local housing market. The core issue, a noticeable slowing of border trade flows. When U.S.-Mexico commerce booms, Laredo thrives. Logistics, warehousing, transportation. But when trade slows, policy changes, economic weakness in either country, or supply chain disruptions, Laredo feels it fast. Fewer trucks crossing means less work, less overtime, and less confidence in the local economy. That weakening activity is directly impacting housing demand. When people are uncertain about job security or income potential, they're far less likely to buy a home. Potential buyers are hitting pause. Furthermore, Laredo lacks the diversified demand drivers of Dallas or Houston. It doesn't have a major tech sector or a massive healthcare industry to fall back on. That concentration makes the city more vulnerable. The city's fortunes are tied to U.S.-Mexico trade, and current global uncertainties increase risk. Zillow's forecast reflects that lack of diversity. A minus 1.2% drop might not sound dramatic, but it signals a weakening economic foundation. For investors, it's a warning the reliable growth Laredo has experienced may be on hold. The housing market is a lagging indicator, and the trade slowdown is translating into softer demand and prices. Until trade flows stabilize, Laredo's real estate is likely to face a challenging, uncertain period ahead. And here's the one that might surprise a lot of people. Number 3 is Austin, down 1.8% by 2026. For the better part of a decade, Austin was the undisputed heavyweight champion of real estate appreciation in the entire country. It was a market where prices only seemed to go up. driven by a massive influx of tech companies and high-earning professionals. Seeing Austin on a list of declining markets is a massive shift in the narrative and a sign that even the most hyped markets are not immune to economic gravity. The primary reason for this turnaround is the cooling of the very sector that fueled its meteoric rise, the tech industry. We've all seen the headlines about mass layoffs at major tech companies, many of which have a significant presence in Austin. While the city's economy is still fundamentally strong, these layoffs have had a direct impact on housing demand, especially at the higher end of the market. The high-paying jobs that allowed people to bid up home prices to astronomical levels are now less secure, and the flow of new tech workers moving to the city has slowed down. This cooling demand from the tech sector has collided head-on with a wave of new housing supply that was planned and built during the peak of the boom. Developers, seeing the insatiable demand, went all in on new construction. Number 2 is Corpus Christi, with a projected home value down 2.4% by 2026. Corpus Christi is a coastal city feeling the pressure. For a market that saw strong appreciation during the boom, this shift is notable. It suggests the factors that once pushed prices up are now gone or have become liabilities. The primary culprit is Corpus Christi's deep connection to the energy sector. Oil, gas, port operations, refineries. When the energy market is booming, Corpus Christi does well. But when oil prices are volatile or decline, ripple effects hit the local economy. Jobs get cut, corporate spending is reduced, overall economic confidence wanes. That volatility makes the housing market cyclical and we appear to be entering a cooler phase. Now this uncertainty is compounded by a classic real estate problem: oversupply. Number 1 is Beaumont. According to Zillow's forecast, this market is projected to see a home value decline of 3.7% by 2026. So, what's driving this projected decline in Beaumont? It's a combination of 3 major factors that create a perfect storm for homeowners and investors. First, and perhaps most critically, are the skyrocketing insurance costs. Beaumont's location on the Gulf Coast makes it highly susceptible to hurricanes and extreme weather events. As these events have become more frequent and more severe, insurance companies have been forced to drastically increase their premiums or, in some cases, pull out of the area altogether. This makes the total cost of homeownership substantially higher. Second, weak job growth in the local energy and manufacturing sectors. And third, limited population inflow, as buyers and investors look to larger metros for stability. So, there you have it. Beaumont, Corpus Christi, Austin, Laredo, San Antonio. These are the 5 Texas metros Zillow is flagging for potential price declines by 2026. It's an overall declining trend, but it's crucial to remember this is not an indictment of the entire state of Texas. The Lone Star State is massive, with incredibly diverse regional economies. A slowdown in a few specific markets doesn't mean opportunity has vanished. In fact, corrections often create the best long-term deals. It's about knowing where to look. While some markets stumble, others still offer strong growth. That's why you need to subscribe to Real Estate Income Hub for next week's video: Top 5 Texas Cities Still Appreciating in 2026. I'll be breaking down the markets that are bucking this trend and showing you exactly where the opportunities are. Thanks for watching, and I'll see you in the next video.